What is going on, guys? Good morning.
Welcome back to Squawk Box. Rick Santelli here live at CME HQ with the important breaking news this morning. The cousin, the CPI, the wholesale side producer price index for the month of June, hitting the wires. Headline number -0.3%. That is 0.3 lower than the unchanged expectations. In the rearview mirror, significant revisions along the line. This one from 1.1 to down to 0.6. And why is that significant? Because 1.1 was basically a 4-year high, so we're coming off of that. -0.3. That would be the biggest negative month-over-month change going all the way back to April of 2020. It's equal to where we were in April of last year at -0.3. Now, let's strip out the all-important food and energy, up 0.2, less than expectations. And rearview mirror, real big revision from 0.4 up to only up 0.1, and it's significant because, of course, food and energy is going to be a volatile area here, but that's still less than expectations. Now let's strip out food, energy, and trade. Number expected up 0.3, comes out up 0.1. No revisions that I see to that 0.8 in the rearview mirror. That was basically a 4-year high. When it comes to how this one compares on food, energy, and trade, well, up 0.1 would be the least amount going back to April of last year when it was slightly negative. Now, let's go year over year, shall we? On final demand headline, number comes in at 5.5. We're expecting a number over 6%. And last month, 6.5% gets downgraded to 6%. So there's another big revision from what was a 3.5-year high. And if we look at year over year, food, energy, that comes in at 4.7. We're expecting a number over 5. Don't see a revision to the 4.9 in the rearview mirror, which was a 3.5-year high. And finally, food, energy, and trade comes in at 5.1. That's actually one of the closest numbers to expectations. We're looking for 5.2. It equals last month at 5.1. So we are continuing to be a little bit high on that benchmark, and I like food, energy, and trade. The 5.1 in the rearview mirror, that was basically the loftiest number in roughly 3.5 years. So we're sticking around in that area at this point. Empire Manufacturing, we're expecting a July read to come in a +9. It comes in more aggressive at 15.6. That would be the best read going back to, wow, April of 22. That's how weak, excuse me. We do have a positive read that was in May. That was 19.6. That was the highest since April of 2022. Now, after all that, folks, what do we see? We see that we're hovering right around 460 in a 10-year prior to the numbers. We're at 458. 2-year was at 420. Now it's at 417. The yield curve is steepened from the 24th of June's close at 24 basis points. Now it's at 41 basis points. The flattening was taking out the easing. The steepening, of course, is to some extent taking out some of the aggressive tightening. And the reason it's steepening is because 2-year yields are a little more aggressive on a give back than the 10s. And as Peter Bookfar has been telling us all at CNBC and the world, what a great research artist he is, pay attention to real rates. They're on the rise. I still see some pressure, of course, in the long term, and debt and deficits do matter. But at least for the moment, sometimes logic gives way to market-driven aspects of fundamentals and technicals intersecting. I still see some potential for some downside, but I can't stress enough. Any close above 467, especially on a weekly basis, or above 518 in a 30-year on a weekly basis, will significantly make the upside more aggressive. Joe and the gang, back to you.
All right, Rick, thank you. Steve Leisman joins us now with more. time moves pretty fast, as you know, Steve. So we had the MOU, oil came down already. The MOU's history and oil's back up. Was this just as cool a number as yesterday? Because people weren't really expecting that. And is it just one point in time now that we're back, at $80 and in kind of a kinetic war again?
Joe, I know it's a wishy-washy answer, but what if I said all of the things you said are true? That on the one hand, yesterday I held in abeyance my optimism on inflation until this number, and this number is a pretty darn optimistic number here. Final demand for goods falling 1.4%. Foods were down 0.6%. So that's a pretty interesting issue right there. Of course, energy leading the way, minus 6.4%. My friends who are truckers, we're thinking of you, and we see diesel down 18% in this number here. The core down 0.2. Trade was up 0.4. I don't really like that number. It's why I completely agree with Rick on the ex-food, energy, and trade number, the one to look at. But more importantly, when I look up the chain, and I do this every time the PPI comes out, I look at the pressure beyond just at the producer level, look at intermediate goods, that is also doing well, and not much pressure in there coming down the pike. I believe the intermediate number was down 1.2%. So that's something you want to be careful about and say, you know what, if that's happening, then there's not the pressure up the pipeline that's coming down. Another reason to be optimistic about this number is we know that the BLS is making some important technical changes to this index that will take effect in September about inflation when it comes to software and some other tech goods out there, and that's going to help it in September as well. So I think what we're seeing here is this concern about the Fed needing to hike in order to deal with inflation, maybe coming off the boil. And while I say that, I'm going to take a look at the probabilities, which were down just a second ago. Now they're down to 52. So it's still out there as a odds-on bet for September. We're down to 9% for July. So I think of these probabilities, Joe, as the next month, the coming meeting is a bet, and the next month after that is kind of a hedge. So it can be either way. It's 50-50 now on September. You're right. We may get a situation where some of this comes back into play because of oil and gas prices. But if it's not spreading to the core and not spreading to other areas, we saw in the CPI yesterday and the PPI today, the Fed can be more relaxed about the inflation numbers.
Rick, well, you're still here, Rick? Because something
absolutely.
that people have pointed out to me, and I've kind of seen evidence of it. When it becomes less likely that the Fed is going to hike, doesn't it seem like long rates tick higher? And the opposite is true when it seems like they might be firm in their resolve to maybe hike. The long end seems to act better at time in terms of rates coming down.
Yeah, you know what? I think that you're accurate there, and I think the evidence of that is in the steepening yield curve. It really has been driven by a combination of stiffer long rates, which you've just pointed out, and a real abandonment of short rates, quick cycle up and now cycling down. But of course, what's going on in the Mideast could change all of that. So I think there's part of that is the Mideast, but part of that also is, and I'm taking Jamie Dimon's words here after that interview, there's tectonic plates under the market for debt and deficits. The UK economy.
All right, what is going on, guys? What is going on? So let's go over the PPI numbers. So CPI obviously is important for consumers, right? PPI is obviously important for producers. So it's basically the inflation on the producer side of things. And yesterday we got a CPI number that kind of surprised 0% month over month in a good way. Core CPI came in 2.6 versus 2.8, and then CPI month over month was minus 0.4%. Year over year was 3.5 versus 3.8, and the trend continues today with PPI coming in at 0.2% month over month core versus 0.3%. So if you strip out food and energy, and then PPI month over month minus 0.3% versus 0% expected. So cooling inflation continuing once again. Now, obviously, what is this person saying? Did you catch the spike? No. Obviously, this is June's numbers, right? So this was when the memorandum of understanding between Iran and the U.S. was signed, and the oil prices had dropped in June. If you look in June, right, this right here, this all happened in June. July 1st is right here. So we got an uptick from $67 in oil to $80 a barrel in light crude oil just in July. So this captures, the numbers capture all of this, right? So we are back to this kind of tit for tat skirmish between Iran and the U.S. and, you know, oil has ticked up and we'll see what happens. But obviously, if that continues and oil continues to push up, then all of these numbers, I think, will give back by the time July CPI and PPI are reported in August. So it's yet to be seen here. I do think there might be a nice oil short today. And as I said, as I said yesterday, I'm still bullish on the indices. And I say that lightly because, you know, obviously if you look at SPY and QQQ, SPY broke out. QQQ is still knocking on the door of that trend line, could break out today. But it's not like I think we're going to do that. You know, I think we will make a new high for the S&P in July. I don't know that NASDAQ makes a new high because it is lagging far behind. It does look like things in Korea might have bottomed after the 25% decline. And this right here is the South Korean ETF, EWY. But you could see how often it creates these rounding tops, right? And it does fall into a bear market actually quite often because it's so dependent on a few memory names. So, yeah, things for now. I mean, I think it is cautiously bullish, right? And if you look at BTC, and this is something that I shared yesterday in my stock market write-up in the Discord. I did my stock market write-up yesterday, but saying that there are pockets of optimism here that look like we could be on the verge of a short risk on rally. So if you look at Bitcoin, for instance, forming an inverse head and shoulders after sweeping 2026 lows, we are slammed up against the 50-day moving average right here, but we just popped above it. This has the chance to potentially get towards that $70,000 to $80,000 range on Bitcoin, which obviously, as the asset that has been the most dead out of everything, if Bitcoin starts running, that would be, I think, a very risk-on sentiment. Obviously, I talked about the breakout in SPY, the potential breakout in QQQ, the potential that Korea has bottomed as well. It looks like we are on the cusp of a plausible risk-on rally for the rest of July. Obviously, things before midterm election will still be shaky, in my opinion. Love the fundraising But with all this fraud in America, who knows how much of that money really helps the people it supports? It's supposed to. Okay. First low IQ comment of the day. I don't touch the money. The fundraising happens directly through St. Jude. So when you donate through YouTube, it goes directly to St. Jude. If you're saying you don't trust St. Jude, maybe it's because you're a moron. I have nothing to do with that. I'm just using my platform to facilitate an area where people can donate directly to St. Jude. That's it. I don't take that money and give it to St. Jude. I have nothing to do with it. And I match the donations from time to time. I try to do it once at the end of the year when I've compiled all the donations that you guys have given, and then we'll look to match that amount. But thank you for the low IQ comment. You can easily research St. Jude. You can even visit a St. Jude. If you never have, I recommend you do that. Funk 101, good morning. Surf, what's going on? Nijo AA, what is going on? Babin BC 193, good morning. Pulse Auto Market, good morning. Emeraldo 9, what's going on? Tristan 92, Max Spam P4I or P4L. Regine, what's going on? Casey, what's going on? Paranoid, good morning. This guy thinks Z is UNICEF. All right. Colin, appreciate your donation to the apparent scam that St. Jude's is. Apparently, those hospitals don't even exist. We can't even visit them. They're just building somewhere in rural Ohio with telephones in the middle of the room. Who knows? Who knows? Just asking questions. We don't even know if that's a real hospital. What is your expected drop in market in coming 2 months? I don't know what that means. $100% legit? Dude, I was being facetious. Corrective move in SPY? What are you guys talking about? Right now, you high, bruh. No, I don't do that. Every time your mom offers me drugs, I tell her, look, drugs are bad. Look what it did to your kid. And I have enough evidence through you, through her, so I don't touch that stuff. I've been watching for weeks every day market open, but too scared, plus don't know how to start and open my account. Can you help? No, I cannot help. What do you want me to come over to your house and help you open an account? Come on, dude. You guys got to do the basics. Like, I was a beginner. Everyone was a beginner. But you know what we did? We fucking searched relentlessly to figure this shit out. And if you're at the point where you don't know how to open an account and you need me to come over to your house and open it for you, this is probably not for you. And that's perfectly fine. Serrano, thank you, bro, for the $20 donation. Thank you, man, to St. Jude's. The higher that we go in pre-market, the worse it gets, because as we went over yesterday, data highs and lows tend to get taken. And I think, oh, there may be a short here, actually. I'm not bearish on the day, but obviously we're talking about retracements here. ETFs you recommend for what? ETFs I recommend for what? PPI numbers. Rewind it. The beauty of YouTube is you can stop asking me questions we already went over, and you can click the little slider and go all the way back. Is futures the most profitable form of day trading? I think all trading is extremely hard, and the reason that it has such a high failure rate is because people don't put in, anyone can open an account and do some damage. There's nothing else in the world. Hold on, I'm trying to see if there's a potential short here, but there's nothing else in the world where you can try to be a professional on day one. Nothing. Not sports, not medicine, nothing. But in day trading, you can open an account and try it. And so people open an account, they try things, and either they lack the technical knowledge, and for sure they lack the emotional wherewithal to be able to handle day trading, because it's not something that we're built for naturally. It's something that goes counter to all human thinking and human emotion and human reaction and human survival. It's extremely counter-natural. So you have the technical aspect of it, which is actually the easiest part. And then you have the overcoming of your nature, which is the part that takes years to really understand why you need a counterintuitive mindset and emotional state than the one that you came into this world with. So whether you're day trading futures or options or penny stocks, that part doesn't change. So if you look at ES here, we took out yesterday's high. Oh. Wait a minute. The discrepancies on the 4-hour. So we have a little bit of divergence on the 4-hour. And I really want one of the indices to take out 830 low. I think ES is too far to do it. But I think NQ can take out 830 low. Bitcoin finally looks like it's breaking out here. We might get a breakout in NVIDIA today. We did already have a breakout from this trend line, but this 211 level is so important. So what I would love to see with NVIDIA, I would love to see a swipe. Sorry, hold on. I would love to see a swipe of pre-market low. That one might be on the deck today for a day trade. Netflix reports earnings tomorrow, I believe. Yeah. I'm very interested in this one. I'm not going to trade earnings on Netflix because it's a 50-50. I looked up the numbers already. Google holding this trend line really well. ASML reported earnings this morning, completely smashed it, and continues to be one of the best trending stocks. If you look at this trend here, off the 2148 EMA. So they beat both earnings and revenue, and they raised guidance beyond what was expected. Hood with the nice bounce yesterday from the 9 EMA in this gap. I'm long Hood shares for sure, and I think we can get to 120 this week. We took a long position on coin yesterday. Which has one of the more interesting charts. You can see here. This level on coin that it has bounced off of 5 times since February 2024. And not only that, but this inverse head and shoulders that it creates all the time after bouncing off there. We have one now. But if this gets confirmed above the neckline, then I think coin is on its way to 200. And that's assuming that Bitcoin also breaks out here. How about Google, brother? Why is it not 400 yet? Did ASML release their earnings? Yeah, this morning. Are you playing TSM earnings? And now we got all the love and all the shine. You always want it all the time. And we don't have to worry. And we don't have to hold on to pain we left behind. The option market overestimated TSM stock earnings move 70% of the time. So most of the time, TSM does not beat the expected move. And the expected move right now is 5.2%. Let's look at the chart real quick. Oh, PayPal's up almost 20% because of the news that Stripe might acquire it.
$60.50 a share, all in cash to acquire it. This is reporting from Reuters that was dead on. It does seem perhaps that it was an organized leak in part to try to put pressure on a board of directors that will be meeting, I am told, as soon as July 20th to discuss this. My understanding as well, according to people familiar with the situation, is that there have been talks, or at least offers being made and talks that have resulted between this group and PayPal for some period of time. Many months ago, in fact, this sort of started, and there was some reporting back some time ago from the likes of Bloomberg, I believe, about Stripe's interest in PayPal. This is an interesting potential deal that would not involve Stripe merging with PayPal. It would be part of this buying group with Advent. They would be putting up $17 billion in equity, is what people familiar with the proposed deal tell me. By the way, also including, don't want to make too much of this, but does include, I am told as well, some participation in the equity side as well from Jack Dorsey's block. And so you would have this buying group that would then take PayPal private and then try to run it better, improve the Venmo service, for example. A lot of opportunities there. Our viewers can see, of course, the stock where it's been over some period of time. This is not even its 52-week high, let alone, of course, the highs this company saw a number of years back before things slowed dramatically. One reason why Stripe might not want to do it in terms of taking it in, well, there might be some regulatory, unclear, haven't really investigated that, but it's got a far higher top-line growth rate than does PayPal, and certainly that would slow it and perhaps upset.
What do you think about Walmart? Pretty far away from where I live. VST, this is just consolidating. Remember, we went over in my last video accumulation, expansion, distribution, accumulation. There's nothing here. I really like Hood. Would you recommend a leap 1 month out? One, I don't recommend shit to you because that's your job, not mine. If you don't know how to take analysis and formulate your own trades, then you should be paper trading and then documenting those paper trades and see whether the moves that you're making actually have an edge to them. So if you're asking now if you should be in Hood, I mean, Hood has been making higher highs and higher lows. Obviously, a rounding bottom pattern broke major trend lines. If you're picking now to get into a leap when our entry price was in the low 70s and Hood is currently trading at 115, you're probably chasing a move that you didn't recognize early on. And while I'm an advocate of not, saying, oh, I missed the bottom. That means that I missed the move. This is a huge move to miss and to chase up here with options, in my opinion. Again, do what you like, document it, whether you paper trade it or actually take the trade. But my job is not to recommend you anything. My job is to make you understand, or to try to get you to better understand market patterns, trends, risk management, whether something is in a trend or not, whether something is tradable, etc. What you do with your own money and your own portfolio is up to you, not up to me. Do you still like TE? Bro, if you have a pure play that you are willing to hold for years, how are you going to ask someone a week later if they still like it? And it probably means that your framing is not well adjusted because you want things to happen immediately. There's a difference between a trade and an investment and a speculative investment. What do you think is the best buy in the dip this opportunity? I've been buying Oracle. Terrible buy. Not sure why you're buying Oracle. Thank you for that $10 tip, but this is not a chart that you buy. There is absolutely nothing to buy here. The thing that I think, one of the things that a lot of people don't understand is that strong stocks tend to go higher. If you look at the market like a bargain bin at a discount shop, you're going to get burned. The market is full of stocks that just keep going lower when you don't think they can. Oracle, in my opinion, is a terrible company because unlike the hyperscalers, unlike the real hyperscalers, Meta, Amazon, Microsoft, and Google, Oracle is 400% almost of debt compared to its equity. 400% debt to equity. And it hitched its entire wagon on OpenAI. And if OpenAI does not generate enough money to pay Oracle back, Oracle truly stands a chance of becoming insolvent. Its free cash flows are negative. It's spending more money than it ever has. But the difference between Oracle and Microsoft, Google, Amazon, and Meta is that Oracle is actually drowning in debt. So if you compare this with the real hyperscalers, debt to equity on Google, 0.189. Compare that with 400%, right? If you take a look at Microsoft, the balance sheet matters, bro. 0.3. You look at Amazon, 0.4. Oracle is 3.7. So 370%. Don't get stuck in this, oh, it's cheap, I'm going to keep accumulating. It's you have to recognize why you're buying, and it can't just be this thing is dropping, I'm going to pick up more. So no, I don't think Oracle is the best buy the dip opportunity at all. This is actually a stock I wouldn't touch. Now, would I trade Oracle? Yes. When a trade presents itself, I would totally trade it. But am I buying Oracle and closing my eyes and betting that Sam Altman is going to be able to generate enough revenue to pay Oracle so that Oracle can pay off its debt? Not me. That's not my bet. I'm not hitching my wagon to that. It might happen. I'm not saying it won't or it will. I'm saying what is a good buy versus an extremely risky investment. And in my opinion, buying a company that has 400% debt to equity and saying, I'm going to make money on this in 10, 20 years. Anthropic is already eating OpenAI's lunch. Oracle hitched its wagon to OpenAI when OpenAI was the only game in town. Now look at what Claude is doing. Look at what Gemini is doing. So, no, in my opinion, it's not the best buy the dip opportunity. The best buy the dip opportunity is the obvious one. It's usually way more obvious than you think, right? When cash generating machines are down 20, 30%, you buy them. That's the best buy the dip opportunity. I hope that helps. And I welcome your feedback. SK Hynix listed on 3 exchanges. Big mess because of the US. You're right. Yeah, you're right about SK Hynix. But I don't think that is in the short term. We took a short on DRAM. So I bought DRAM puts and I sold DRAM calls, and we closed those on Monday. So we bought them on Friday, closed those on Monday, because of the anticipation of the sell the news effect. I wonder if we can make it down to data low here. 1 second. Not as big as a range as yesterday. Let's see if we close here. I think NQ takes data low and ES doesn't. And then I think we get a long. "45 seconds until this closes." I typically don't like trading right before market open because even if you're right about direction, market open, the wicks at market open can definitely take out your stop. But sometimes if it sets up before market open, it's hard to say no to. And ES actually has equal lows at Asia. 96950. I'm going to ladder into this position. I'm not. Yeah, so we have major divergence on the 15-minute. I wonder if we'll get beyond 830 down here. 29,875.25. Oh. Wait a minute. Yeah, we have major bearish divergence. I wonder if we get something like this. Or do we just do this now? Yeah, I think I'm going to wait for market open. Which is in 9 minutes. I'm going to wait to see where the manipulation is. Thank you for your answer. Oh, was that about Oracle? You're welcome. When a company IPOs, stick to the 6-month rule. Yeah, but SK Hynix is not an IPO. So what you are saying is buy Amazon, Microsoft, Meta, and Google. If you're just figuring that out now, what's Meta debt to equity? Plug that in AlphaScope or in Google. McDonald's and Nike looks cheap. I think Nike's a terrible stock. Can you explain why you're looking at both ES and NQ side by side? Because they're related indices. And I want to see which one has relative strength and which one has relative weakness. That's a good question. SpaceX and SK Hynix are not the same thing. Trouble, man. SK Hynix is not an IPO. What do you think about AEHR stock? I don't think about it. Looking for divergence. Yeah, another thing you look for is divergence. Exactly. MP, thoughts. Thoughts and prayers. DC8 into Microsoft yesterday. Strong thesis. Need to see it hit and hold above 400. Am I way off? A little bit. I think that you are confusing short-term price and long-term viability. If you buy Microsoft as an investment, why do you need to see it above 400? That makes little sense. What does seeing it above 400 in the short term have to do with your investment thesis? Market opens in 4 minutes. Did anything change with Duolingo? It's not a company that I would be interested in, so I think you're on the wrong channel. Where are you streaming the news? We already went over the PPI news. Click the slider and drag it to the left. SMCI is not like Oracle, dude. They're completely different companies. Yeah, NVIDIA needs to get above 211 in the short term if you're talking about the short-term movements, because that right there is a very strong level for NVIDIA. What is your outlook on SPCX? It's a buying SpaceX is a test of IQ. That's my outlook. I meant like debt issues, bro. Okay, dude. You can easily do this. Does SMCI have debt? Have a lot of debt. The internet is fucking free, guys. Does SMCI have a lot of debt? Yes, SMCI has accumulated a significant amount of debt. If I'm not answering your question because I'm busy answering every other question, use freaking Google, bro. Market opens in 2 minutes. 2 minute. 1.5 minute. Want to see if we get a manipulation up there, and then I will consider shorts. But I think, let me see something. I would really much rather have it do this. That's a 32-point stop. I'm going to take this trade here. Holy candles. Okay, you see how ES manipulated up there? And NQ didn't? This is jumping around, dude. Let's see if it hits my stop or not. It's a 30-point stop, and it's like a 3-to-1 trade. So I'm willing to take this at the open. I think we might manipulate to the upside. Up 1200, 1300. I might scalp this here. 1200, 1250. All right. We'll live with that. ES is so strong. It's for whoever asked me, why do you keep ES and NQ side by side? Because of this. Like on NQ, this trade looks fine. ES looks strong, but that to me was a manipulative move, and we might come back down. Let's see. All right, scalped for a nice little $1,200 profit. I think the optimal move that I want to see is that. But ES is kind of fucking things up here. Hilarious. So I decided to just scalp it. They're moving in opposite directions. NVIDIA, I think, looks like it's going to get going above that trend line, which is a shame because what I wanted to see from NVIDIA was the opposite of exactly this. I wanted to see NVIDIA do that and then that. Oh, shit. Our coin trade is nice and off the handle right now. I bought 50 of the Con L calls yesterday. These are up 32%. Let's go. In my opinion, I think this is just getting started. Rules came with time, and now you got all the love and all the shame. God, where's my jacks? Yay! Oh, 165 is a major level for this week. Yeah, this 165 is going to be stubborn. But if we get above that, 172.5 is right there. That new Kanye, Stay Stuck in My Head, bro. They did the refresh of some of the songs and then released the deluxe version. Man, that album fucking slaps. Are you still in NVIDIA Leaps? Yeah. Why would I not be in NVIDIA Leaps? I love how you guys ask me about things that are long term. Like, am I still in them? And you'll ask me this from day to day, as if I'm just going to what? Be like, oh my God, time to get out. I know I bought these for at least 6 months out, but I don't know how to sit on my hands, so maybe I should just close them. Ah, my trade played out fully, huh? My trade played out fully and immediately. Told you guys data low is going to get taken. Who can call price better than this? What is he typing? That's between me and your mom. I don't know if I can tell you that. Why did you short NQ instead of ES? Because I like violence, my friend. Yeah, NQ's weaker. And also NQ was much closer to 830 low. So I figured that would be the one that is most likely to take it. T Black, appreciate your donation to St. Jude's, man. Thank you. Damn, perfect trade would have played out. Why did I get out for a scalp? I had 2 contracts too. But I'm glad y'all made money. I'm glad y'all made money. For swings, aside from technical analysis, is there any other information or data you consider? Yes. What is the overall market in? Is it in consolidation? Is it in a trend? How closely related is my stock to the overall market? I look at options data. Is there a significant amount of gamma that can help my position one way or another? I also look at whether the stock in and of itself is trending. Is the sector that it's in trending? So like, for instance, data centers right now, I don't think that that's something that you want to swing. Is Z always like this during live trade? What does like this mean? What's a good call to get in right now? I really wouldn't look at the market that way. And I think you're going to get hurt if you're just looking at random things to jump into. So I wouldn't look at the market as like a lottery. I think that you should be looking more for how it is to find and spot trade entries as opposed to what calls can I buy now. And yes, I do think there is a long potentially on the indices soon. Wish I learned how to read JEX a long time ago. Following the money game changer, yeah, 100%. How can I find about finding swing trade entries? You should start with technical analysis. So I have a free video on YouTube, technical analysis for beginners. You can start there. Obviously, I'm not the end all be all, and you can learn from other resources too. But at this stage, I don't think that you should be paying anyone or buying anything. I think you can learn the basics. If you're still a super beginner, I think you can learn the basics for free. And I actually think that there is a certain minimum level that someone should be at before they join trading groups, whether mine or anybody else's. I think trying to, like, if you don't even know yet how to pull up a chart and do the basics, I think you have a lot of work to do before paying someone. For a trading community, in my opinion. And while we do have quite a few beginners in the group, if you're at that level, at that beginner level, in my opinion, there's a lot of studying that you should be doing for free before trying to join a group. And obviously it doesn't benefit me to say that, but I will always be honest with you. And I think you can study for hours, days on end, before getting to the point. Oh my God, this is no. Before getting to the point where you can follow the analysis that's given in a group. I blew a ton of money on Honey Drip. What is Honey Drip? I've never heard of this. TSC? Don't know what that is either. I assume these are services, and I didn't know what the F I was doing. I still don't, but back then was chasing the wind every direction instead of, yeah, you're going, you have to shift your focus from give me a play. I want to make money. What calls should I buy? What stock should I buy? You're never going to make money like that because you don't understand risk management. You don't understand when to cut a trade. You don't understand how to size. You don't understand how to manage your emotions. And someone can throw all the proper tickers at you. If you don't have that other stuff dialed down, you are going to lose money. It's inevitable. It's not like knowing the lottery numbers ahead of time and then, putting that into your lottery ticket and then winning the lottery. Honey Drip is the Aristotle guy. He is bad. Oof. NQ is nasty? Not really. I mean, if you rewind the stream, I told you that level is going to get taken on NQ. It just depends on how it gets taken. That right there is just PPI low. What was your career before you became a full-time trader? I was in tech. So first in finance, then jump to tech for the money, to be honest. And then quit that altogether. I think we get to these equal lows on ES. Let me see here. And then I'm going to jump through some tickers. What are your thoughts on what? Oh. He deleted his account. My levels are just off. I mean, data low is an obvious level. I think NQ takes that low at least. So that's a 4-hour fair value gap down here. That's Asia low. I still think let's see here. I wonder if we get rejected at 9:30. Per gamma, it looks like we will make a new low on ES. I might take a short here, to be honest. It's super suboptimal. $75.50. Do we touch that low on NQ? Or should I be looking at longs here? It can go either way, to be honest. We took Asia low. I don't like that we didn't take that low. But That right there is data low. So we took Asia low after sweeping data low. Do we take this? I wonder if we get along on NVIDIA too. This is what I wanted to see at open, not this, but I wanted to see it sweep pre-market lows. There is a chance we get along on NVIDIA here. I do want to take this on NQ. Microsoft is getting going here. Beautiful breakout. I think this one runs too. Let's see something here. So off of 830. I might try this here. Google and Microsoft both look good from a trend perspective for sure. Meta is knocking up on this trend line here.
Bank profits and CEO bonuses, knowing that American
I forgot this guy was
taxpayers
talking.
will be on the hook once again if there's another devastating financial crash. Congress and the American people will be watching closely whether you serve the public or whether you become yet another instrument of Donald Trump's corruption. Thank you, Mr. Chairman.
Thank you, ma'am. Chairman Warsh, thank you for being with us. The floor is yours. 5 minutes.
Thank you very much, Mr. Chairman, Ranking Member Warren, other members of the committee, good morning. It's a privilege to join you. It's my first appearance before this panel as chairman, and I'm particularly honored to represent my superb colleagues from across the Federal Reserve System. In submitting the monetary policy report, I can't help but think of a long line of central bank chiefs who came before the Congress in keeping with the Federal Reserve Act, and I can't help but think of the best of the Fed's traditions. As a country, we just marked our 250th year, and when Americans count our blessings, we can include an economy predicated on the brilliance of our constitutional design and system of ordered liberty, an economy without equal in all it's done for human flourishing. Some forms of communication, including some that the ranking member referenced, are discretionary, but not this one, and for good reason. It's a prudent and wisely conceived obligation designed to keep the Fed responsible, accountable, and faithful to the mandate that you gave us of full employment and price stability. These obligations are of a piece.
There's a ton of divergence here between NQ and ES. This is not the best thing to trade here, as ES is about to take that high and NQ is still stuck down here. And remember that NQ has not yet swept that low. And they're moving in opposite directions now. This is really untradeable conditions on the future side.
Consumption growth is moderate, and manufacturing output has moved up steadily this year. The housing sector, however, strikes a different note. It gives a different picture and continues to lag. I want to highlight the most striking feature of our economy right now, and it's business investment. It is a surge in capital expenditures. Compare that to what we've seen for a long, long period of financial engineering. This is a better situation. The rapid pace of CapEx, which appears to be accelerating, reflects in large part the construction of infrastructure, including in and around AI and the immense demand for AI-related equipment and software. Investment in equipment overall increased about 8% for the year in the first quarter. Within that category, high-tech spending logged an especially impressive growth rate of about 25%. We don't yet know the extent to which the economy will benefit from this build-out. Yet it seems inevitable, at least to me, that what is now called AI investment will soon just be called investment. Even so, new opportunities for the economy introduce new challenges for policymakers. We at the Fed are monitoring the implications for the inflation and for the labor market. That brings me to the supply side of the economy, a subject worthy of equal attention, where productivity growth has been strong. And I'll note that this productivity growth predates gains from AI adoption. America's labor force appears to be broadly stable. Job creation has kept pace with the workforce. The unemployment rate low, and has changed little, quite frankly, over the last year. We're seeing relatively few layoffs and only slight variance in the rate of job vacancies. Solid growth in nominal wages, too. I've been heartened by the welcome I've received and by the encouragement of my colleagues. We have a duty to point the institution forward, to take a fresh look at current practices, to make sure we're serving our objectives, and we're going about it systematically. As the chairman referenced, I appointed a task force in each of 5 areas that are central to the conduct of monetary policy. I'll just reference them and close. First, Fed communications. Second, our balance sheet policy. Third, our use of existing data. Fourth, productivity and jobs. And finally, the Fed's inflation framework. Our purpose here is to make better decisions in the conduct of monetary policy and put these years of high inflation behind us. We are the Federal Reserve, Mr. Chairman, and as determined as ever to fulfill our mission. Thank you, and I welcome your questions.
Thank you, Chairman. Each member will have 5 minutes to ask questions and get answers, and I'll start that off. And I'll start off with your working groups. I think credibility equals transparency, and the names that I've seen on your working groups, from Doug McMillian, former CEO of Walmart, to Mark Andreessen on productivity and AI, tells me that you're serious about getting real-world experience and expertise involved in making decisions at the Fed. want to give you just a minute of my time to walk us through perhaps one or two pieces of that, as we talked about the importance of having contrast on the committee, on the working groups. Really important from my perspective. I think it lends itself to having more confidence in the Federal Reserve. I want to give you a minute to talk about one part of it, and then I want to move quickly to AI.
All right, let me be brief, Mr. Chairman, but you're highlighting something that's awfully important. All institutions, including the Federal Reserve, which I am so proud to lead, filled with great people, on occasion, we need to bring new ideas to the fore. And after 63 months of inflation above the Fed's target, it struck me that any new leader should arrive at this organization and look to the very best minds that we could find. There's a lot of great ones at the Fed, but there's a lot of great ones that aren't even in the economics profession. And I reached out to 15 people who I have known and trusted with a diversity of views to see whether they would take the most important questions that are going to be the determinants of monetary policy and the determinants of the economy in the next 5 years and see if they could sharpen their pencils and do their best work. It's a move towards transparency and new ideas. I'll just give one example before turning it back to you. In the last couple of days, we've gotten data on consumer price index, today on the producer price index. Any central bank would be happy to have the data going in the right direction. My view is these are all imperfect measures of the state of underlying inflation. So one of the task force is going to see whether we can do better, have better data from external sources, and even better ideas as to how important organizations like the Bureau of Labor Statistics, the Bureau of Economic Affairs, might think about how they could do a better job in an evolving economy.
Thank you. We met just a few weeks ago with Dr. Phelan, who's slated to be the head of the president's economic advisors, and we talked a lot about artificial intelligence and the impact it will have on our economy, and whether or not it will destroy jobs, create jobs, and ultimately, at the end of the day, his conclusion was that it'll create more jobs. Artificial intelligence has an opportunity to change how we do so many things, and much of the debate for me can be bifurcated into automation, things go away, and augmentation. People make more money because production goes up, and you've argued that perhaps there's a way for us to see a reduction in interest rates because of that increase in productivity. One of the things standing in the way of that conversation is what's happening in South Carolina, where data centers are meeting real headwinds. New York has basically banned them. We have a moratorium in parts of South Carolina because of issues like electricity bills, water use, aesthetics. So getting to the future that we're talking about and frankly beating China in this AI race might come down to something as important as electricity bills and water usage, which could prevent us from having a serious conversation about productivity gains. Thoughts?
Yeah, I can't think, Mr. Chairman, of a more consequential change to the U.S. and global economy in my adult lifetime than the surge of investment and the potential in around AI. That's part of the reason why one of my task forces is to focus on what's the effect of this general purpose technology on both parts of the Fed's mandate, on ensuring stable prices, but also on full employment. You gave us both parts of that.
Yep.
We don't have any legislative orphans at the Fed. There's no disfavored part. I would say it is a huge opportunity, but it's not without challenges. I'll make two other brief points. I think the United States is extremely well positioned to be at the cutting edge and extract more productivity, which should be good for U.S. companies and U.S. workers, than any other country in the world. Any other country would exchange positions with us in a moment. Second thing is, I do want to make it clear that in the near term, I think this investment is probably quite good for jobs as we're building out the infrastructure. And over the long term, my best guess is that this will improve American productivity and will improve the real wages and will help us on full employment. But between the short term and the long term, it can have a disruptive effect. And we're attuned to that, and that's part of the reason why I wanted to shed some new light on it with some outsiders.
My time is up, but I will submit one question for the record around the issue of indexing our regulatory thresholds. We've seen so much growth in the since 2019 that our institutions might need to see a little recalibration on the thresholds that we have put upon them. Ranking Member Warren.
Thank you, Mr. Chairman. So the Federal Reserve has long been plagued by a culture of corruption and coziness with Wall Street. Over the last 5 years, at least 6 senior Fed officials have been implicated in serious ethics scandals related to personal stock trading and self-dealing. But instead of trying to repair this broken culture, I'm concerned that you seem to be embracing it. At the time of your nomination, you owned more than $100 million worth of shares in private investment vehicles called the Juggernaut Funds and THSDFS LLC. And you refused to disclose the underlying assets to the Senate and to the public. You say now that you've sold those shares. In other words, somebody wrote you a check for more than $100 million days before you entered office. Chair Walsh, who wrote that check?
Senator Warren, this is a discussion you and I had in the public square 7 weeks ago, and I'm thrilled to tell you that I have fully honored the obligations I had under the agreement I had with the Office of Government Ethics.
Yeah, I'm
there is
glad you
continued
did,
disclosure, which I'm happy to make as consistent with the agreement.
I asked you a very specific question. Who gave you $100 million right before you were sworn in? Was it a billionaire who has business with the Fed? Was it Stanley Druckenmiller, who's made billions of dollars betting on what the Fed does? Or was it a different billionaire? Who gave you the money?
I will fully comply with the Office of Government Ethics.
That's not an answer.
Well, it is an answer, actually, Senator, because there are obligations,
and
I will satisfy them
completely. It's $100 million that you got just before you were sworn in, and you won't tell the American people where it came from. Let's go to another incident. As you know, the Fed imposes a blackout period where senior Fed officials are prohibited from talking about economic issues with outsiders. The idea is to, quote, reinforce the public's confidence in the transparency and integrity of the monetary policy process. In other words, no one gets some special insider information from the Fed. But shortly after your first FOMC meeting as chair, right in the middle of the blackout period, the Fed's vice chair for supervision, Michelle Bowman, was reportedly the featured guest at a secret dinner hosted by Bank of America for its hedge fund and Wall Street clients. At this closed-door dinner, she reportedly spoke about both monetary policy topics and regulatory policy. Now, I've called on the Inspector General to review her conduct, but you're the guy in charge.
Man, ES is just, honestly, since even before market open, just been chopping here. There were a couple of good moves in NQ. I caught part of one. But haven't really enjoyed this price action here. That gamma down there is still open between 75.10 and 75.15. You can make a case for a short. Is it the highest quality trade? No. I do think that we potentially get a long later. Remember that Friday is OPEX. So it's no surprise to me that we are pretty volatile. And, you know, CPI, we went up. So PPI, we're going to take back all those gains. And then we see the real move later. A couple of things are really holding up nicely here, including coin still up 1.5%. I'm going to talk about DRAM in a second. But this setup that I talked about yesterday on Microsoft, now bouncing off that trend line. And I said that when I did the analysis on where was it? I did the analysis on Microsoft a couple weeks back. but it typically has a pretty strong July. And it has never not had back-to-back positive Julys. And last July was the first one after a streak of negatives. So I do expect Microsoft to have a nice month. And so far it is up 6% in July, in the first few days of July. And earnings are still on the 29th. And it does have a habit of moving before earnings and then during earnings having a muted move. And we also have the same head and shoulders pattern that we have on other stocks such as Coin, and Palantir. Yeah, this is not the best of trading conditions. Hindsight should have held the full extent of that move that I had on NQ in the morning. Meta now making a run for that trend line. Watch for this breakout here. Because if Meta breaks out of this, then I think we get a move to 800 soon. Well, not soon, but within months. Yeah, 700 is inevitable here. Your long thinking is wrong on what? I'm not long on anything right now for a day trade. Or are you talking to someone else? I don't know. But watch Meta here for sure. I wonder if we get to the 100-day on Marvell. which sucks because I own it. I own it in the, what was my cost basis? $227. Yeah, the most gamma's at 200. It's currently trading at 206. So 200 would be, I wonder if it sweeps these lows. I'm almost sure it does. Man, I'm glad we caught part of the move this morning, but shit, what an ass market to trade.
Quarter or so.
And you will fully disclose who you sold your assets to?
Well, fully comply with the law and the ethics agreement.
Thank you. AI is making a huge impact on everything we do, particularly the banking system. And as you're aware, an interagency governmental group, Commerce, Treasury, Energy, et cetera, has authorized the major banks, the 8 major banks, to use Mythos to evaluate their security. Would you agree that it's important for all financial institutions to have access to these types of AI tools so that they could analyze their operations for cyber vulnerabilities?
Yes, I think the broad financial system has new vulnerabilities with these new technologies. I wouldn't want to just isolate Mythos, though. The other large language models have rival products. The changes, the efficient frontier has changed even in the last month. But as these new models find their way more broadly, our banking system and, frankly, the Federal Reserve needs to do all we can to patch any vulnerabilities that we have.
What are you doing to ensure that these mid-size and smaller banking institutions have access to whatever AI tool is appropriate as quickly as possible?
Yeah, so I share the sentiment, Senator Reid. We are not the deciders as to who has access, but I have not been shy in sharing my views with authorities across the government about the vulnerabilities and have been asking for access, not just for the Federal Reserve, but for other institutions, to a whole range of these new artificial intelligence models so that they can protect themselves. If you said to me what worries you over the course of the next several months, I want to make sure that we're as protected as we can be from foreign actors that want to do us harm.
Well, let me stay with AI, but change the focus a moment. Recently, Governor Waller and New York Fed President John Williams have warned that AI investments may be increasing inflation, and many economists have similar warnings. So are AI investments current drivers of inflation?
This is one of the good family fights. Let me give my own view on it, which might...
Why does this guy love the word family fights?
The shock of AI, the supply shock of AI, has an effect on demand and supply. We see the effect on demand much more quickly. We see it in the capital investment I referenced. We see it in the prices of chips that are going up. We're inferring which is just a fancy word for guessing when the effects will happen on the supply side of the economy. I don't view a one-time change in prices as necessarily being inflationary, because I think there's a supply response. In that way, this is different from a foreign conflict and what it might do, which tends to reduce the supply side of the economy. Will it increase measured prices over the course of the next 12 months? I suspect it will be. But whether that's inflationary or not, that's up to the Federal Reserve, and we're going to have something to say about that.
Okay. Now, one of the interesting things about our economy is becoming more and more productive. But one of the disappointing things is that household pay is not rising relative to that productivity. And we're seeing less benefit from productivity gains. So
this is interesting. We just tagged the 4-hour fair value gap, the tiny one down here. I wonder if this presents a long. Is this the draw? It could be, but I don't know. Is ES... What a fucking shit day. We tagged the 1-hour fair value gap, swept that low on the 1 minute. This might be a low quality long, but I'm considering taking it, considering the risk to reward.
This is the seed corn for the next group of job creation and.
I already have a little. We already made like around 1250 off of the little scalp this morning. We obviously have divergence because NQ's all the way down here and ES hasn't even taken out data low yet. But it did take out AM low and filled most of the RTH gap. I think it's worth a shot, even though it's not the greatest of longs. What time is it? Four-hour fair value gap. Yeah, I think it's worth a shot.
framework. So my question is, how are you thinking about updating these tailoring frameworks when it comes to what banks can expect to see and proposals in the future?
So it's a great question, one I take seriously. To be candid with you and the chairman and the other members of the committee, monetary policy has distracted me a bit in the first 7 weeks.
We are coming up on this 5-minute fair value gap that we need to evade here. But if we close above this, then I think $17 seconds. I may already move this to break even, to be honest. These ranges are so big. This looks like a tiny move, but I'm up $2,000 already. This is a tall task.
The rule.
But we are in a macro, and we did sweep major liquidity. The question is it the draw? Really hard to tell with the gamma picture also being very messy. And there's still some gamma down here, which can signify that ES wants a new low. Don't stop me out for break even, bro. And I don't trust this move enough to keep my original stop. Because it was off of this. 1 minute IFEG. So my stop was originally down here. I think the audio on this video went out. Hindsight, should have scalped it. We now have bullish divergence between NQ and ES. Not the prettiest of days. Yeah. Fuck it. I'm going to close this at break even here. I don't even care. I should have scalped it. But obviously ES is so close to 830 and we still have this pesky little gamma here. I'm going to wait to see what ES wants to do. It's not a bad long, not A+. Man, if I had just let the first one play out to the fullest extent, I wouldn't even be messing around here, to be honest. Why are you whistling? Because your mom just flashed me on FaceTime. What the fuck, bro? Focus on the shit that actually matters, dude. There's a positive correlation between how pedantic somebody is and how shitty of a trader they are. Why are you whistling? Why is your thumbnail like that? Why did you do your hair like that this morning? Why are you wearing sunglasses? Why are there wires in the background? I didn't feel good about the ES long. The long on NQ. Yeah, I mean it's because of this. This is still telling me that there's gamma below and ES is very close to that data low. So while the long could work, it's a low quality long, and in hindsight, I could have scalped another 2K on top of the 1250 I made earlier, and that's probably what I should have done. As opposed to hoping we get clean big moves. But let's see. If it sets up, then we'll be back in it. Pedantic is an adjective used to describe someone who is overly concerned with minor details. Yeah, that's why I used the word. Show your trades. I showed you a trade on screen. What is wrong with the audio on this site? What's insane is the rumor yesterday that Lucid was filing for bankruptcy, and it's up 18% today. Granted, it's a penny stock now, but I wonder if I can find a better feed of this war stream. What the hell? Is YouTube just down?
Sectors, including energy, unquote. In other words, a reason that we're seeing prices go up is that the supply of products and services has dropped in some areas of the economy, right?
Yes.
And I do think it's important that the public understand the causes of some of these supply shocks. You would agree, would you not, Mr. Chairman, that the war in Iran has caused a supply shock in the energy markets?
Yeah, the military conflicts have caused the price of oil to be higher than it otherwise would.
Absolutely right, and Americans are paying the burden of that as we go. We've also seen supply shocks in other areas. Last year, your colleague Austin Goolsbee, president of the Chicago Fed, said that, and I quote, "A tariff is like a negative supply shock," unquote. And we've seen plenty of tariffs. Obviously, we have the Supreme Court decision that may bring those down over time, the impact of it. But the negative supply shocks have been real and can be traced to the Trump administration agenda. So when you say that supply shocks are part of the reason prices are going up, you would acknowledge that they're the result of decisions that have been made by the president, like going to war with Iran, right?
So what I'd say is particular price shocks happen to particular prices that we don't have control over, but I don't want to suggest we don't have control over inflation in the medium term. That's our job. But screwworm affects beef prices. Other things affect oil prices and milk prices, and I understand that has an effect on people's household budgets.
Indeed, it does, and I think we've seen the price of energy go up by billions.
Crazy that there's the rotation that we talked about weeks ago is finally taking shape, where Amazon, Meta, Microsoft, and Google, as well as Apple, are all up over 2% today. Even as the NASDAQ is down 0.6%, as the semis are getting hit. So AMD, Nvidia, Broadcom, actually Broadcom is flat. Marvell, Dell is not a semi, but it's down 12%. So we have a lot of things making these head and shoulder patterns, and a lot of things making an inverse head and shoulder pattern. Let's check gold, since NQ and ES suck ass. Gold is just chopping too, barcoding.
Question of transparency. And I do think, given the president's past record of trying to influence Fed behavior via social media with respect to your predecessor, if he's trying to influence Fed behavior through private conversations with you, I think that needs to be something the public is aware of. And I'm asking you whether you will commit to disclosing when you have conversations with the President of the United States.
Senator, I can offer you this assurance. The President has not, before I took this office, before I raised...
Google just popped. It's been in this pattern since yesterday. It's just a classic break and retest here. And it's likely going to all-time highs. It's also my biggest holding, along with ASML and Apple.
But I always get a kick out of my Democratic friends talking about transparency. You know, toward the end, God bless him, you could bake a Thanksgiving turkey in the time that it took President Biden to walk across the stage, and they kept it quiet till they couldn't. I'm sorry it was in that condition, but this transparency stuff cuts both ways. What's wrong with you talking to the President of the United States?
So, Senator, I've got a wide lens. I'm interested in hearing points of view from a whole range of people. We have a narrow remit. I'm interested in what's happening in the world, in the Middle East,
I mean,
and elsewhere.
is there anything wrong with it? Do you have to, when you do it, do you have to like go out and look for the last phone booth in Washington and put a bag over your head and sneak in there and call him or return his call? Is there anything wrong with that?
I certainly don't feel uncomfortable receiving a call from the chairman of this committee or the President of the United States.
Okay. Do you think Ben Bernanke ever talked to the President?
When I was a governor, I recall several conversations and
How
frequent
about Alan
meetings.
Greenspan?
When I was a young staffer in the White House, I remember being...
These are useless questions. But if you look at memory, Head and Shoulders, if you look at software, inverse Head and Shoulders. Same as Bitcoin, inverse Head and Shoulders. Obviously coin, inverse Head and Shoulders. So it's crazy how many things have a Head and Shoulders, which you definitely don't want to be in long trades on. That's fine, obviously, to buy stock. I'm saying in terms of like long swing trades. And even though I went short memory on Friday, we booked it Monday. Got an update yesterday. Could have went short again, and it's back to the level from Monday. But Korea closed up on the day after bouncing off the 100-day. So I think memory is going to continue to be a little volatile here. Korea looks like it confirmed and finished the distribution pattern, but it looks like Micron still has a little bit left to go. This is still a big deal down here on the S&P. So for whoever asked me why I got out of the long, it's because of that. And even if we do long, I don't trust it past these retracement fibs, to be honest. I think that this is all just positioning after such a green day yesterday and a positive CPI. I might actually take this short here. And I will not make the mistake of not scalping. Left a lot of money on the table, to be honest. Let's see. $9.30. Fuck, that was a plus trade.
Details, even much of the deliberations. I want to do that in the public square because we all own these decisions at the end of the day. Ultimately, decisions will be made by my FOMC colleagues. I think they'll start to get briefings on some of the early reports from the task force, early indications, hopefully as early as September, with my expectation and hope by year end, we're going to hear their conclusions and decide what to do with it.
Thank you. And then just for clarification, in January of 2025, do you recall the inflation rate? It was about 3%, correct?
I'm going to have to take your word for the precise number, but I knew inflation was still well above target.
Yeah, it was about 3%, and that's when Joe Biden left office. And the current inflation rate right now is about 3.5%, is that correct?
There are various measures. I'm confident in telling you it's been above target for 63 months. It's
is it
not where we
above
want it to
3%?
By some measures, by other measures, it's not. But I don't want to suggest I'm happy with any of those measures. I'm not.
Okay, I appreciate it. Let me talk a little bit about an area that is important for me, and I think many states that deal with a hospitality tourism industry. Unfortunately, under this administration, we've seen significant declines in the number of international visitors to the U.S. The current situation has actually led
Yeah, and back to that head and shoulders versus inverse head and shoulders. It's crazy. I don't think I've ever seen anything like this in the market. It's like almost perfectly inverse. The trade that was in vogue and the trade that was forgotten have now flipped. Yeah, I think MU it's inevitable we take out that low. I don't know that we get all the way down to the 100-day. But I'll tell you what, that will be an insane opportunity. If we do. Remember, MU was trading at 1,200. All the price targets, I think, are between 1,800 and 2,000. Meta's knocking on the door once again. I think Intel can fall below 90. Ah, fuck. I swear, man, Gamma told the story already. Reject. ES makes a new low. This is why I didn't long it earlier. Simply because this kept me out of trouble. All right, ES took out 830 low. Wonder if we get a long now. So what I want to see here is, does this start to disappear? It's, on the contrary, it's growing even more. Fuck. I mentioned Oklo in my previous video. I didn't. I haven't mentioned that in at least a month. Let's long the market. Go ahead, bro. Your world. Long the market. I think we will get a long, just not now. Possibly New York lunch. Most likely when this is done.
There is almost a page talking about M2 and monetary aggregates. That was done with a purpose. I do not show up here as a monetarist. I do not show up and say the secret to inflation is if we only knew M2, everything would be swell. But monetary aggregates had been taken out of the monetary policy report probably about a decade ago, maybe a bit longer. My view is that a modern central banker should have a mosaic of information and should not be allergic.
I'll be right back. 1 second.
Happens to be inconsistent with dogma that he or she might have been taught in Econ 1. I have this old-fashioned view that monetary policy has something to do with money. I remember an old professor of mine that said, who was a proper Keynesian economist, he said, well, I don't understand how to think about inflation in a place like Zimbabwe without talking about money. So I think money matters. What we witnessed when we looked at some of the monetary aggregates is they are not perfect. We don't measure money very well. We don't measure the velocity of money very well. But it's a pretty good cross-check. And had we seen the surge and paid attention to the surge in inflation and money in 21-22, we might have seen this problem sooner. I apologize, Mr.
Senator Smith.
Thank you, Mr. Chair and Ranking Member. Chair Warsh, welcome to the committee. So you may know that Minnesota Senator Hubert Humphrey, who's once held the seat that I now occupy from Minnesota, led the charge in Congress to include maximum employment as part of the Fed's dual mandate. And we can probably agree that keeping these two goals of maximum employment and stable prices within the confines of the monetary policy power that the Fed wields, that just makes sense. Because it's a strategy that delivers stable prices, a strategy that delivers stable prices while working people can't find jobs or can't afford their lives. I mean, that's not a healthy economy. I expect you to agree with that.
And I do. Thank you.
So I was very interested in the task forces that you established last month to advise you on reform and modernization. And I want to just ask you about one of them in particular. You've created a task force looking at productivity and jobs. And that's really good, it seems to me. This task force should be able to get at the power of the Fed's dual mandate and ask also some of the big questions that everyone is asking about the power, the impact of AI on wages and people's income and employment. So let me just ask about this particular task force on productivity and jobs. So as I understand it, it is led by three people, venture capitalist and investor Mark Andreessen, who's made billions from AI and is a major Trump donor, another tech executive who recently laid off thousands of people, and then an academic economist from my alma mater, Stanford University, who is currently on leave to do research at Anthropic. So I want to ask about this. Is there anyone on the task force who has experience in the labor market, or somebody who can bring the perspective of an employer rather than an investor to the questions that are going to be asked and hopefully answered by this task force?
So if I could say two things. One is those three people you referenced are three of the smartest people that I know. And I've been...
I'm not disputing that. I'm wondering how you intend to bring into this work the perspective of people who are working people, bring in the perspective of labor and not just investors.
I think it's a fair question. I've got 18 colleagues who are going to join me and consume the deliberations they have in the report. And we're the ones that have the dual mandate. And as I said to your colleague, there is no disfavored part of our mandate, and we're awfully focused on full employment. So that's my commitment to you. We haven't outsourced this decision to three people. What we've outsourced to is a bunch of thinking about this massive technology shock. And I'll only note one other thing. Chad Jones, that professor that you mentioned, his academic work, he's an academic, I'll admit that. But
I'm not opposed to that. I'm just trying to figure out.
But his academic work has been very, very focused on what is the effect of the labor markets of these technology shocks, both the good and the bad. And I think that history he can bring to bear.
All right, what's going on, guys? Any thoughts, SPX at 135? Like I said earlier in the stream, I think SpaceX here is an IQ test. Does it hold? How can anybody tell you that? This is SpaceX chart. How can anybody tell you this holds? I could tell you that that is the IPO price, and I could tell you that that company is not worth that at the moment. But to each their own. All right. I want to look at some levels here. Yeah, I think it'll be time to I might sell puts on the memory names. But if you bought and held the Mag 7 at key levels, I think your portfolio is definitely smiling today as Apple makes another all-time high. Holy shit. What does Tesla look like here? $420, $405, $410. is that? This is looking super bullish for next week. Look how tight Tesla's coiling here. I wonder if this is the next one to break out of the Mag 7. Oh, you know what one I wanted to check was Cisco. Oh my God. Thank God I did not. I was considering. I was considering trading this break and retest, but thank God I didn't, because there's this huge gap here. Oh man. So I think the move is just wait until this dumbass stops talking. And then I think we get a nice move on the indices. I'm not surprised that NVIDIA is finding some resistance here.
With law enforcement?
Yeah, so I made a bold statement to one of your colleagues before that I was opposed to scams. I can make a bold statement, I'm opposed to criminal activity. I have no reason to believe there's any criminal activity here, but I think we want to get to the bottom of an investigation. If there's an ongoing investigation and investigators generally want access to things, there's no reason why they shouldn't have access.
Thank you. I want to turn to a proposed rule that is being considered and ask for your thoughts on the proposed rule. And it has to do with the Federal Reserve Board's payment accounts. Skinny master accounts is kind of a term that's used. You know, my staff has told me that if a doctor submits statements to an insurance company, they have two choices. They can pay 5% in bank fees or wait 90 to 120 days for a paper check. It seems to me that the Federal Reserve is really on to something by trying to join other countries that restrict access to the payment system to consumer-facing banks. We're the only major country in the world that restricts access to the payment system to the consumer-facing banks. So I think you're on the right track to expand the opportunities to serve consumers. And I'm curious about what your thoughts are about the proposal, how it's going, when you expect the rule to be finalized.
Yeah, so as I understand it, this skinnier master account proposal's out for comment. It was sent out before I arrived, but I'm keenly interested in what the comments are. My mental model is that the critical infrastructure, the rails that the Fed runs, should be available to those that are applicable, that can comply with our rules and regulations. If I were to draw a hard distinction, this is a public good, and it's a public good that should be used by intermediaries. I don't want the public good to be used by consumers, by people that are on the front lines. But if financial institutions, new and old, want to comply with our regulations and take advantage of this public good, my general predilection is to encourage it.
Well, I think that's admirable and important. So that's it's out for comment now. Do you anticipate finalizing sometime this year?
I owe you a better answer on the timeline from here, and I pledge to give it to you.
Thank you.
Thank you.
I share a concern that was expressed by my colleague, Mr. Haggerty, that monetary policy should enjoy the committee not having to be as transparent about its process. I agree with Senator Haggerty also that the bank supervision component should not enjoy that same level of non-scrutiny. I think we need to scrutinize bank supervision. I'm concerned that that area was sort of hidden from public view for too long. And so I want to just echo what Mr. Haggerty said. Thanks, Mr. Chairman.
Yes, ma'am. Senator Kim.
Yeah, thank you, Chairman. And Chairman, thank you for coming on out. I actually wanted to build on something that Senator Warnock was going into about AI. And I guess I wanted to ask you, I've seen some public reporting that there was a report produced by Treasury staff for Secretary Besson, the Federal Reserve, and other financial regulators that outlines the risks associated with the AI boom. Are you familiar with this report?
I can't say that I've read that report, but it's certainly a discussion that the Secretary and I have had.
Is that something we can follow up on, get a sense of where the status of this report is?
Yeah, I'd be happy to both engage in the report and share with you my views.
Yeah, but regardless of the report itself,
of course this dude is asking about AI.
That much of our financial system right now rests upon AI meeting expectations for productivity gains as profitability.
I wonder if we get a gold short here. This to me looks like a potential sell model.
Do you agree with these underlying economic risks, or do you believe that that analysis is overstating the risks?
So I think this is the most important change in our economy in my adult lifetime. I think it has plenty of opportunities and also plenty of risks, and I take both of them seriously.
Yeah, I mean, it's something I'm trying to grapple with too. So I'm not expecting that you have a fully baked answer right now, but I hope we can work on this together, because I do think when we're looking at that future, trying to think through the data, I'm trying to think through what data is going to allow us to understand how exposed we are, what the concerns are. And I guess I would just ask you, as you're looking at the data, how would you assess our economy, the state of our economy, if you were to isolate out AI, which I know is driving so much of our growth right now? How is the rest of our economy doing?
So it's a fair question. We can start to do a little bit of that. So I mentioned in my opening statement the importance of capital expenditures to aggregate GDP. A good share of that CapEx boom is broadly in and around infrastructure related to artificial intelligence. Not exclusively, but it's part of the real story here. If I were to fast forward 12 months, whether these AI models continue to grow in their efficacy on some exponential curve or not, most of this CapEx is going into things like data centers, new sources of energy. And let's say there was a disappointment on the returns and what AI could do. Many of these investments have alternative uses. But if the question is really how much productivity do we expect to ultimately get from AI, the answer is I don't know, but I'm optimistic that over a longer time horizon, it'll be quite good for the United States and good for both parts of the dual mandate, lower prices and a stronger labor force.
Well, I hope we can work on this together and try to get a clearer understanding of just how much risk there is. And look, I'm glad to hear about this, this task force that you're putting together about the productivity side. I will just say the concern amongst young people in particular is very potent and very real. And we have to come up with an answer to them to help them feel reassured right now. Because I get it, they are, as you said, more native in the technology. But that doesn't necessarily help them when the companies themselves are saying, we don't need to hire as many junior associates or other jobs, especially on the more entry level side of things. No matter how much native fluency that they have or understanding and skills, if the businesses are saying, we don't need as many people at the younger, lower end. And so as you're dealing with this task force, I hope it's something that can interact with this committee. I hope we have a chance to be able to talk to some of them and hear from them in that capacity. But I also say, we need to make sure we're speaking human about this.
I wonder if we see a huge flush in data centers. It's Wednesday, but what this is showing here is a flush to 170 to 180 is very doable this week. This, I'm talking about Nebius. Wait, what? 12.87. I think 170 looks inevitable. I might take puts on this, to be honest. Yes, on the short, unless bad news comes out. I don't know what that means. Also, I don't trade based off of news. I'm going to think about this. But I think 170 is inevitable on Nebius. And it would complete this head and shoulders 100-day moving average. Yeah. God, this is so fucking painful, this price action. Palantir's waking up for sure. I think this goes to 150 soon. My gold short? What about it? MVO breaking out. Like I said, I think MVO is going to have a great back half of the year. Zero fucking optimal moves. Yeah, Google is top 3 holding. My biggest 3 holdings are Apple, Google, and ASML. Broadcom was in there too, but this latest, like when Broadcom went up close to 500, it became a top 3, top 4 holding for me. But since dropping back down to like 390, it got bumped out of that spot. Let me look at Hood, because I think this one, even though I am long Hood, I think this is the next. Even though I really wanted it to sweep those lows, it might just go. Let's see. Yeah, I had it at 120 end of week. I'm long the shares. I don't know if it's worth it to buy options here. All right, there's a few things that I'm looking at. I'm looking at a Nebius short. Obviously, long Google, long Meta. Google keeps getting, NVIDIA keeps getting rejected at this level. On the 4-hour, it looks good because it looks like it's just making higher highs and higher lows. And then want to see if Meta can break out of this trend line here. thank God for gamma data, because this for sure kept me out of trouble from so many premature longs on the indices. Like I said, I don't think that there is an optimal long until we clear that level on S&P. And it might be when this dude is done talking. Could have made more if I decided to just scalp the moves. Green on the day, was green yesterday. Can't complain, but definitely should have made more. So, obviously any trades I take, I'll send it out in the Discord. Look for the swings, especially that potential short on Nebius. Because if it does, it can, I think there is a chance that it can drop big by end of week. So yeah, I'll see you guys in the Discord. Peace.